Inflation is hitting through the roof. Retail inflation rate surged to 15-month high at 7.44% in July of 2023, primarily driven by rise in prices of vegetables, cereals, pulses, spices, milk and other eatable products. This, of course, as per data released by National Statistical Office (NSO). The inflation print had last breached the 7% mark in September of 2022, and the previous high for the headline inflation rate was recorded at 7.79% in April of 2022. This is the third instance of retail inflation rate crossing the upper limit, which is 4 plus minus 2%. Banned for the Reserve Bank of India's medium-term inflation target for this calendar year. Let's talk about the impact that this inflation, or very high inflation rate, is going to have on people, and what can the government do. To talk about that, joining us on the show is Yuvika Singhal, who's an economist with QuantEco. Yuvika, thanks very much for taking time out. Good to have you back once again on the show. I want to first begin by understanding from you, how worrying is this? An inflation print of 7.44%, how worried should we be?
Hi, so yes, it's somewhat concerning because it's an elevated inflation print, like you rightly pointed out, above RBI's comfort level or the inflation targeting band of 6%. And it surprised the number that we saw, coming on Friday. It surprised most of the market expectations, somewhat on the upside. So we were pegged somewhere close to about 6.9, and the number did surprise us a good 50-60 basis points above that. So yes, it's somewhat concerning, but I think if we deep dive and take a look, there are some concerning and not so concerning aspects in the inflation fine print. The most concerning, probably, which has caught a lot of attention, is the inflation that we've seen driven by tomato prices. And we have seen prices skyrocket through the months of June, July, and even continue to remain elevated in August. So a large part of the inflation has been driven by tomatoes. Not just tomatoes, but a bunch of other vegetables, also ginger, garlic, chilies, some bit of price pressures beginning to inch up in onion prices as well. But if I was to look at a broader commodity of the food basket, so we do see price pressures coming in from some of the other staples that are consumed by the households, especially those on cereals, both wheat and rice. Some bit of price pressures also coming into other subcategories such as spices, pulses. So overall, we do find that momentum in food was somewhat strong, not just because of vegetables and within which tomatoes, but also some broad-based price pressures in other categories such as cereals and pulses. So that is one part which is definitely concerning. I think there are two things to keep in mind: that typically tomato prices are extremely seasonal. So we've seen in the past that months of June, July, we typically see tomato prices shoot up. While having said so, this year's price escalation is much beyond anything that we have seen by historical standards. But notwithstanding that, we also expect a seasonal correction in tomato prices to follow. And that is when the new Kharif harvest of the tomatoes coming into the market somewhere around August and or early September, we should see a pretty sharp correction in tomato prices and some of the other vegetable prices. Now, what will be interesting to see is that once that seasonal correction pans out, whether it's in line with expectations, and do the prices normalize completely by end of September. So that is one thing that we'll keep a watch on. And second, whether the other price pressures that we are seeing in cereals, pulses, and we know that the government in the last few weeks has been extremely proactive in taking a lot of administrative measures to rein in price pressures in some of these other food categories. So we'll have a better picture emerge when some of these administrative measures have had their full role to curb the price pressures. So we will know where we stand as far as food inflation is concerned. And by that time, we'll also have the end of the southwest monsoon pretty much known to us. We know that monsoon performance has dipped in line with expectation with IMD. We are looking at a 5% deficit vis-a-vis long period average at this point in time. So a clearer picture would emerge. But having said so, just the rise and the pace of increase that we've seen in prices in the months of June and July have meant that our entire year's FY24's inflation forecast is now looking revised upwards. And we have, in fact, before the data release, we upped our entire full year CPI inflation forecast from 5.3 to 5.5. And we continue to see some upside pressure coming onto this number further, could be to the tune of 20 basis points, depending upon how global prices perform, whether like I said, the domestic prices normalize or not, and the monsoon performance, which will be critical in the months of August and September to determine how the crop yields are by the time we close the Kharif season. So
All
this is
right.
broadly
Yuvika,
what we are thinking.
right.
Just to add one more point,
Sure. Sure.
I think the only comfort that we drive in this CPI print, which did seem concerning, like I said, on food, tomatoes, a lot of other subcategories, is the correction that we continue to see in the core side of inflation, which we call the demand side of inflation, which continue to remain fairly elevated above 6% for a very long period of time. And now we see that month after month, a correction on the headline core inflation print, which now, in fact, for the month of July dipped below 5% for the first time in almost close to about 2 years.
All right. I want to take this one after the other, and Krishna is also here with us. We discussed this story in the morning. I think one of the things and crucial takeaway for us from this conversation is a lot of these things are not in our control, is not in government's control. There is supply side problem, there's the southwest monsoon, there's the excessive rainfall or deficiency of rainfall, a lot of which we cannot control. There have been some administrative measures, as Yuvika also pointed out, that the government has taken at this point in time. But a lot of it, Yuvika, is not in government's control. We want to understand what exactly is in government's control. What more measures can the government take apart from, we saw in case of tomato prices, government tried procuring tomato from western part of the country to supply it to the northern part of the country where the prices were at an all-time high. But what other administrative measures do you think that the government can take at this point in time to control inflation?
Right, so I think the easiest to do is something on the cereals front, where both rice and wheat have, we typically have the buffer stocks available in the country, and this is something which has been done since time immemorial, that government goes out and procures rice and wheat after every Rabi and Kharif season respectively to build on the buffer. So the easiest would be to have open market sales, put out more rice and wheat into the market. And cereals, to remind you, contributes almost 10% of the food basket. So that will have a sizable impact. And it's not just rice and wheat, but derivatives of rice and wheat. Both are used extensively in other products, bakery products, confectionery, etc. So the multiplier effect of cooling of rice and wheat prices moves beyond just the staples, but a derivative of products which use them as raw materials. The other thing where the government has been active and could be perhaps a little bit more proactive on the pulses front, we have seen imports of pulses one-to-one between different governments, Indian government and some of the other pulses producing nations getting delivered. We also hear of the possibility of wheat imports, which is not a bad idea per se. And we could also see some kind of tax reduction on those wheat imports to make it a bit more lucrative as far as price points are concerned. I think these two, pulses and cereals, being a large dominant by weight in the CPI basket, if the administrative measures will be much more useful on these fronts. And like I said, on tomatoes or vegetable prices, usually the crop cycle is extremely small, anywhere between 2 to 4 months. So there the seasonality will kick in. It's just a matter of probably a few weeks from now. We already see tomato prices on a daily basis move beyond the peak. So in the last few days, we have seen tomato prices correct. Still a long way to go to achieve the pre-June levels. But nevertheless, I think the peak is past us. So the point that I'm trying to make is that the administrative measures need to be on more on the cereals and the food grains front, where the negative surprise could be seen as far as the Kharif rice is concerned, or our wheat buffer stocks are lower. That is where the action needs to be. And the horticulture and the vegetable oriented prices would anyways give you a seasonal respite by the time we are in the month of September. So I think that's where the balancing act needs to be, that the focus has to be on cereals and pulses.
All right. And you mentioned imports. Would you also be of the suggestion at this point in time that we limit exports? We've done so in case of rice. That sort of helped the rice prices cool down in India. Would you suggest the same for other pulses and other cereals too, to perhaps bring in some sort of export restrictions?
So for pulses, not as much, because India is a importer as far as pulses is concerned. So we continuously happen to rely on imports year after year. So there's nothing much that they can do there. As far as rice exports is also concerned, we are sitting on somewhat comfortable buffer stocks. In my mind, the measure of exporting, a complete blanket ban on non-basmati rice exports was somewhat, very, I would say, very preemptive in some sense. They could have waited and seen how price pressures actually pan out over the course of the next few months. But I think that's a decision that the government has taken. But we are still on comfortable buffer stocks as far as rice is concerned. And not to forget, we also, being a major rice exporter, India has the ability to stoke rice inflation globally. And given that this is an El Nino year, which could impact adversely a number of the rainfall performance in a number of Asian nations, which are rice producers, maybe a couple of months down the line, we'll see global prices of rice actually moving up much more strongly than we have right now. So there are a lot of pulls and pressures as far as limiting exports or imports are concerned. And I think it's something very dynamic, because the global dynamics are also changing given climate risks and the evolution of climate that we are seeing, especially with El Nino knocking at our doors. But I think the moot point is that the government has to be nimble footed to take action to not just rein in price pressures, but also keep in mind that we do not stoke global inflation pressures, because that could also come to haunt us at a point later
Right.
in the year.
All right, and before I let you go, I know you have to run off to a meeting, but addressing the elephant in the room, these numbers are dampener. They are also going to be closely watched by the RBI. What are you expecting as far as the next MPC is concerned? Or is it too early to say?
No, so I think the jury is out there that, as far as RBI is concerned, and a number of, close to about 7.4 is definitely raises red flag, as we called it. It's a red hot inflation print. I think what needs to be seen here is that a large part of it is, like I said, driven by supply side and supply side shocks, especially coming in from vegetable and tomato prices. So we know a large part of this will get reversed by the time we are in the month of September. What RBI also indicated that they are willing to look through these supply shocks, as long as these supply shocks are only temporary in nature. But if there was to be a durability in the price pressures, not just of vegetables, but also of other food prices, because they could stoke generalized inflation, impact inflation expectations of households, RBI will be on careful watch. So as of now, while our base case scenario obviously remains of a prolonged pause, the timeline to cut probably has gotten shifted another quarter. So even earlier, we were not looking at any rate cut in this fiscal year. We were calling for a quarter one, but probably the wait to a cut has gotten prolonged by another quarter. So probably quarter two of FY25 is what we are looking at for rate cuts. And if you ask me for a rate hike, it's an outside chance. Like I said, there are too many moving parts at this point in time, but we'll have to wait and see whether the durability of the inflation price pressures that I talked about move beyond the months of October, November. At this point in time, we are not looking at a rate hike, but an outside chance, I think, cannot be ruled out either.
All right, so you can never say, you can never predict. This is a difficult, of course, number to digest, and as you can see on your screens, food inflation indigestible at the moment. Krishna, nice wordplay at that. Yuvika, thanks very much for joining us.